And a pleasant good day to you. This is Owen McCafferty again, speaking on behalf of the kindness of Professional Fusion to offer an idea relating to lease agreements. A lease agreement is an agreement between a lessee and a lessor as to what the duration, cost, payments would be, and other necessary terms that are specified within an agreement. An agreement is a documentation, if you have any sense, that's written between the lessee and the lessor, which has specific specifications of what is to be paid, how it is to be paid, who's responsible for what expenses, and what actions are required, as well as a duration in terms of the time and any sort of renewal options that would be available. There's a whole slew of other issues in lease agreements in terms of revaluations after one segment of time is concluded and an option exists for another section. There's specifications as to how the coverage should be for insurance purposes, be that on an actual cash value, a replacement cost, historical cost, or a variation of all of the items that exist. But I just want to go through a few issues, and the theme of today's discussion is, with the lease agreement, who pays the costs? So when you ask who, you have to identify who are the parties in interest in a lease agreement. Well, if someone owns a parcel of property and they lease that parcel of property to somebody else who says, I'm going to take that property and improve it and maybe put a building on it or improve an existing building. And then once that building is improved, I'm going to take that parcel and I'm going to offer it for lease to a third party. And I'm going to then assume the obligations of maintaining that property. That's a classic example of a land holding limited liability company on a triple net lease, a modified lease, or possibly a gross lease between the entity that is leasing the land in making improvements and then leasing it to a subsequent lessee. So you have multiple different lease agreements. You have a lease agreement between the operating entity, in this case, let's say the partnership, or the veterinary or dental or dermatology practice proprietorship, and a separate entity that is improving the parcel. So for purposes of example, let's look at the most simple one. And that would be, I go into a shopping center, I have a parcel of property and I want to develop it. Well, I don't want to assume all the obligations and the risks of developing property. So another entity, which is a little bit more skilled than I am, says, we'll take that property, we'll lease it from you, we'll guarantee you a fixed amount payment for a period of time. Of course, that period's going to be long enough to establish economic reality. And then we'll improve that property. We'll improve it to the point that it will be marketable to a third party. So that becomes the shopping center. The shopping center then says, we're going to look for tenants. And one tenant that we may look for would be a professional practice. This professional practice would be, for example, in veterinary medicine. And so they find a doctor of veterinary medicine and they say, we will lease you this property on a gross lease basis. That means that we will pay, except for maybe some minor issues, most of the costs of operation, and we'll establish a large single lease payment that you make to us. And then we'll cover all of the costs and expenses that relate to it. So that shopping center development group then goes to the people that own the land and say, don't worry about a thing. We're going to pay for all the costs and expenses. We're going to write you one check per month, and that's yours. Of course, if there's any interest expense that you owe on the land, that's your job. Or if you want to have specific named coverages apart and separate from what we're willing to offer, that's your obligation. But we, as the shopping center development group, will pay all the costs of operation. We'll pay the real estate taxes, the property and casualty insurance, the common area maintenance costs, any sort of repairs that will be needed on the building over the years that follow. We'll assume all those obligations for you. And then you, as the development group for this shopping center, will then go to the professional doctor, and you'll say, look, all you got to do is make one payment to us, and then we'll cover all of the other costs, expenses, with the exception of you trying to insure your own tangible personal property, the obligations that you have in the operation of your practice. We call those liabilities or casualty coverages. The professional liabilities that you have, those are your jobs, not ours. And we may have other specified items within the lease agreement that we're going to tell you they are your obligations. So that, in essence, is an example of a classic arrangement between a landholder, a development group, and then finally an operator of profession. You have to look at the lease agreements. Now, in some instances, the landholder and the development group may be the same. There may be a preference on the part of the operating entity that they will pay all the costs and expenses, and that they will pay a limited amount to the entity that is the development group, but that's specified within the terms of the lease. So the first thing that should be coming into your mind's eye is, we better get a competent attorney. We better get our accountant involved in this, and of course, a great property and casualty insurance agent, again, licensed in the state or Commonwealth, who has multiple coverages available in the American Agency of Property and Casualty coverages, that's going to help us out. There may be life coverages required, there may be disability coverages, there may be business protection income coverages that will all be needed. But we better ferret it out. And of course, that lease agreement better be logical, understandable, and updated on a periodic basis, at least every 5 years. So these documents are costs, but these costs are a cost of doing business. Don't try to do your own plumbing. If you think you know everything about anything just because you have a doctorate, you're sadly mistaken. Be humble enough to respect the competency of individuals in other professions. Don't go under the option that you think that everyone should work for free but me, and that you can get free advice from people, because free advice is exactly what it's worth, nothing. Engage people, establish a business relationship, and hold people accountable for their help in trying to make the lease agreement between the lessor as an operating entity, the lessee as an entity of the land that is then leased from another lessor, which is the entity that owns the property per se. So what I'd like you to do is to sit down, look logically at what you intend to do, and then write documentation that's clear, concise, and very understandable. One last issue. If there's multiple people involved, you should definitely have some sort of provision in terms of what the value would be and how it would be calculated. In a prior variation that we talked about partnership agreements, we established issues related to valuation. I'd like you to go back and look at that video. No sense in wasting your time replicating a narrative that has occurred preceding to this point. I'd just like to say thank you very much. I know these last couple of videos are a little bit longer than what we anticipate, but you don't want to cut in the middle of something. These are important issues. So partnership agreements, lease agreements demand your continued attention. With that, my name is Owen McCafferty. I'd like to say thank you very much. And by the way, the topic area, I have to give credit, was not mine. This morning, after a phone call with a client, my son Hugh, who's also a practicing CPA and my partner, and I had a discussion on this very issue relating to a dear client. So with that in mind, until the next time, thank you very much.